Hey guys, good afternoon, everybody. Today is Monday, April 14th. It is 3:59 right now. Scheduled mentoring session is with Gina and Ben, so I'm going to go ahead and finish setting this up. If you guys want to sit in and listen, you guys are more than welcome to sit in. I'm not going to be answering any questions, so if you do have questions, feel free to hit me up on Discord regarding that. So I'm going to go ahead and just finish setting this up real quick, and we should be good to go. All right, looks like we're good. So let me get this link sent out to Ben and Gina. And so I'm gonna wait for them to get on real quick. No, sorry. All right, just waiting for Gina and Ben to join in. Hey, what's up, Ben? Hey, Gina, how's it going, guys? Can you guys hear me?
Yeah, we can hear you.
Perfect, perfect, awesome. Thanks, you guys. Thanks for meeting with me today. Um, you guys go to Coachella this week?
I did.
I was gonna ask. I was like, you're like everywhere, Gina.
I didn't make it to day three. Let's just say that.
Oh yeah, yeah, no, definitely. We wanted to go to meet Angie, but she's
Uh-huh.
she wanted to go because she was pregnant. She just wanted to go and take pictures. But
Oh, that'd be
Nice.
cute. There was a lot of bellies there, I would have to say.
yeah, which is crazy because it's like you wouldn't expect pregnant people to want to go to stuff like that. But Angie was
Really
like,
hot out there.
I know, this last weekend was super hot. So I'm like, man, definitely not the place to be for sure.
Yeah.
Yeah, I'm over all that stuff though, the festivals and all that. It's like I feel like I'm old now. I
That's how I felt yesterday. Like my friends still rallied, and I'm like, I'm staying behind.
can't hang. I'm like, man, I need to go home. Like once it hits like
Yeah.
5, it's like bedtime.
Yeah. No.
Yeah.
Yeah. Like I think we watched Lady Gaga Friday night and she was late. And by like 8 o'clock, I was like, my eyes are heavy, guys.
I know, like my friends that were there, they were like hitting me up like you should watch the stream, and I'm like, nah.
I'll watch on replay.
Yeah, I was watching on replay. I'm not gonna stay until like 11 and watch a stream.
Yeah.
Yeah, but anyways, guys, so you guys have been watching the live stream, right? And or you guys are like somewhat familiar of like what we've been doing.
Yes.
Okay, perfect. Yeah. So I just kind of want to get an idea of like where you guys are and like what we need to work on and what the focus is. I don't know if you guys are like super brand new. I mean, I guess we could, that's probably where you guys are going to be, or if you guys have some experience trading already, or like, how the platforms work and stuff. Because like basically what we'll do is we'll go over like well, the main thing is I want you guys to have all the platforms and like understand how to use all the tools. And then from there, I'll show you guys like the strategy that we're mainly using. Since you guys have been on the live session, you're probably familiar with it to some extent. And then, build that foundation so that we can go from there to the confluences, to like the red flags, to like knowing when and when not to enter. And then anything specific to like where you guys need help to improve on.
Sure.
Yeah. So let me see. I'll go down the list. So obviously you guys have Discord. You guys know how to use that, right?
Mhm.
Yes.
Okay, perfect. Yeah. So you guys know where to find the live session link and all that.
Yeah. We kind of went through the modules, but I think there's some stuff that we probably want to get like a little bit more insight on.
Oh yeah, no. If there's anything specific, as we go down, I'm basically gonna go down the list to like see if there's anything specific here that you guys need help with. But yeah, if there's anything specific to the module that you need help with or that you're a little confused with, we can go over that stuff in detail.
Okay.
So trading view, do you guys know where you guys plan on trading on? Or, are you guys using a Mac or a PC or?
It's a PC, and so far we have a TradingView account that's we're doing paper trading.
Yeah.
So I'm watching your live in the morning, and I'm just kind of like following your live feed. I had a question also, Sean. Um, the live, is it real time or is it like slightly off?
So if you're on the Zoom, it's real time, but the YouTube is off by like I think 10 seconds or so.
Got it. Okay. All right. So all right.
Yeah, so make sure you're on the Zoom link and not on the YouTube. You'll probably hear me say something and you're like, oh, this shit looks
Yeah, I
different.
was looking at the time. I was looking at the time and the timestamp, and it was like slightly off, and I was like, "Oh, maybe it might be my internet or something."
Oh, no, no, yeah. People always ask that. And I was like, I always forget to remind people because usually, people are on one or the other. But people who are
Yeah,
on YouTube, like before they sign up for anything, they're like, you're kind of laggy. And I'm like, no, it's like delayed. And they're like, they're like on different
yeah,
pages. Sometimes like I'll call a trade or I'll find something and then everybody's
yeah,
right. And then if you're on the YouTube, they're like, what the fuck? Like, how did they get out already in profit? And I'm barely trying to get into it.
yeah. And I
Um,
was curious because I was like, well, people could just go on YouTube and follow your entries.
yeah, yeah. No, the crazy thing is people still follow on YouTube and they still do well. So it's like,
Oh, that's cool.
yeah. Or sometimes like, sometimes it'll retrace up, like the intro happened and it'll pull back a little bit and then they get lucky that way. Or sometimes they enter
Nice.
late. But a lot of times, like we're following like the ATR, if you're familiar with that, price will typically continue moving that direction. So even if they get in late or early or whatnot, usually the trade will still play out in
Okay.
most cases. But yeah, the YouTube is delayed and the Zoom is real time. Yeah. So yeah, and good thing you mentioned that because we kind of skipped over the Zoom and I forgot to even mention that, but we covered that now. So since you guys are on a PC, and you've been paper trading. Are you comfortable with the paper trading aspect of it, or because there's two different ways to trade. You can trade directly on TradingView, or you can trade on NinjaTrader.
Mm-hmm.
I think NinjaTrader, I think TradingView is easier if you're just trading one account. In the future, of course, when you start to like stack accounts, like kind of what I'm doing, I'm trading, I think like 27 accounts. So I'm doing like 20 with one prop firm, 5 with another one, and then a couple with these other prop firms. In that situation, you probably want to use trading NinjaTrader because you can use the copy.
Right.
But right now, if you're only using one, you can probably just mess around with TradingView. It's a lot easier, and I'm sure you've seen it because you just kind of enter on the screen instead of having like two different windows open.
Yeah, I wanted to get your advice on what's best for us to start so we could learn more of the strategies instead of like trying to work out the extra accounts and the copiers.
Yeah, exactly. Just stick with one for now because you don't want to overwhelm yourself, especially when you're still kind of like getting into it. I know some people are just overly eager and they see the profits and they get, it's like they want to put that kind of profit like right away. And I'm like, no, you can't do that because I've been trading for a long time. Like I've been doing this for I think like 12 years now.
Nice.
I've been doing it for a long time. So for me, it's like I understand the risk, I understand how the platform works. It's just awkward for me. But for someone like you guys, just stick to one account. Once you get that consistency and you're starting to make profit, or I would say like trade one, and then once you make money on that and you pass or whatever on eval, then you can start adding on more. But you don't want
Yeah,
to.
I would like to get on the Apex funding account and get to the eval when the time's right.
Oh yeah, no, definitely. And that was the next question too, because I was going to ask if you plan on trading, as an individual, or if you plan on trading as a business. Obviously, when you get better at things, you don't have to make a decision now, but in the future, when you do sign up for the Apex, when you sign up initially, you have to like choose whether you want to do individual or business. Um, the business side obviously is going to make more sense long term because you can take, business deductions and stuff like that. But you can make that decision like later on down the line. Since
Okay.
you kind of want to just get started, get your feet wet, and then once you're able to feel confident to like start adding more accounts and using a copier, then in that situation you can start adding on um,
Right.
accounts on Apex. Right now the promo had just expired, so I'm not sure if you saw that promo that was going on before. There was a promo that was super cheap. It comes back, so if you just wait a little bit, it'll probably come up like around the holidays. Um, it was
I
like
think I still have it. They like I opened the account for 30 days and then they sent me like some type of link for a promo that was like I think 200 something dollars for the year. Is that what you're talking about?
um I think that might be TradingView. I don't think that's Apex, right?
Okay, yeah, I not Apex, no.
Yeah.
Trading
So,
view.
yeah. So Apex, they have like promos that come around during the holidays, and they're like,
Okay.
because normally an account, like if you want to open an eval, it's like depending on like your account size, it would just kind of vary depending on the account size. Normally
Hmm.
it's a couple $100, but I have this admin code that they gave me. Uh,
Okay.
you can get 50% off. So at any time you'll get 50% off. And then
Nice.
at some point in the year, they typically release like an 80% off or something like that. So it's a really good deal because you can basically sign up for like a 50K account. It's not really 50K. They say 50K, but it's like leveraged.
The
So
drawdown?
yeah, the drawdowns of what the account size really is. So if you're doing like a 50K account, the drawdown would be like 3,000. That's still a pretty good deal because you're paying like $40 or $50 to
Sure.
have 2,000 and 3,000 buying power.
Right.
So obviously you have to go through the whole eval phase and all that, but once you're past and you start to get payouts and stuff, it makes sense because
Gotcha.
you're basically you're basically using that as a not necessarily to make all your money, but using that as a vehicle to have cash flow, and then you put that money into a real account like what I do, and then that's where you scale because that's where you could just keep adding money to the account, and then you can go higher and higher and higher with your risk.
Sure.
Yeah.
Sounds like a good idea.
Yeah, because that's kind of what I do. Like for me, if you see all my trades, I'm usually making the same amount of profit. You don't see me scale up on the prop accounts. On the prop accounts, I'm making like a fixed amount, pretty much
Hmm.
or every week or every month, and then
Right.
from there, I'll request payouts like every 8 days or every 2 weeks or 3 weeks or whatever it may be, and then I'll put that money into my actual personal account, like my own money, and then from there I'll take bigger sizes, and that's where I make the bigger profit.
Gotcha.
Yeah. Yeah, but again, that stuff is like it's gonna come later on down the line. Once you're comfortable on the paper account and you start making profit. I mean, you saw the market last week. It was like a shit show. So
Yeah.
probably good that you guys are like not jumping in right away because
I was still watching your live feeds every day though. So and I was watching where you guys are talking about the ATR and you guys are like, whoa, it's like really huge.
yeah, no, it's crazy. Like I've never seen it that high. And I've been trading for a long time. And if you look at like news articles, you're like
Uh,
they dubbed that as like the craziest week ever in trading. Like even like during the stock market crash, because with the crash, it's like the market would just go straight down, It's like
mhm.
you just sell and you could like get lucky, or like during COVID, you could sell or you could buy and price would just go in a direction. But last week it was like it would drop like 2,000 points and it would go up 3,000 points. And like that
Yeah.
never happened. It's crazy. Obviously it's because of Trump, he's a different type of president. It's like I mean, anytime he says anything, like the market just does something completely different. And
Sure.
in a situation like that, it's best to just kind of sit out the market. So like last week I had my first red week, which was okay because I've been doing good for the whole year. So like those red weeks are gonna happen, as long as you don't blow your account, you're perfectly fine. So we had a win today, and thankfully I was able to recoup some of that. But it's good that you were on your paper account and not on your whatever. 'Cause, yeah, the guys who so I started doing this mentorship like in January.
Nice.
The guys were doing good like early from January up until basically last week, and they were like, "Fuck, bro!" Like I was this close to quitting
Yeah.
like Wednesday because they were just so stressed out with like it wasn't that they were blowing the accounts or anything, but it was just they were stressed out because it was moving so
They
fast.
didn't know which way to how to go about it.
Yeah, they didn't know how to go about it, and they're like, "Fuck, if this is how the market is, I don't want to do it," because it's
Yeah.
like their stress goes like
Right.
high, and they're confused and they're nervous, and I'm like,
Yeah.
in a situation like that, you just gotta like stay composed and not like
Right.
fall victim to the trap. Because with a lot
Yeah.
of
Weather the storm.
you gotta weather the storm, like that's just one week. It's like if you were
Yeah.
able to chill last week, you're back into like normal market this week. Because
Sure.
because what happens with a lot of people is like when you start losing, it's like gambling, right? Like if you're in a casino and you start losing, you start to go in a downward spiral. It's like you should stop, but you're like, no,
Mhm.
I'm gonna take some more money. I'm gonna keep putting double,
Yeah.
double, double until
Yeah.
you lose your bankroll. So that's another thing that I'm gonna be teaching you guys. Like you gotta treat trading like a marathon. Like you're gonna have good weeks and bad weeks and okay weeks. But if you're just consistent, you just repeat the process. Because I've been doing this the same strategy and the same routine pretty much every day since the first of this year. So like all my stats that I show, that's just from one strategy. I did that specifically to make a point that like if you stick to one strategy and you just like make small adjustments, like last week the market was crazy, so you just have to widen your targets a little bit, uh, you'll be okay, right? And
I do like where when I'm watching your lives that you call out entries, but you still are very cautious about putting in the entries yourself. So I would like to learn all that and understand all that as well.
oh yeah, yeah, no, definitely. That's a game changer because the thing is, like, there's a lot of entries that'll come up, but there's entries that are really risky and there's entries that are like super safe. Like, were you on the live session today?
Yeah, some of it, yeah.
Okay, yeah. So like this morning we took a trade and like all the confluences lined up on pretty much every chart. And then
Hmm.
other people were also confirming it too in the group. And I was like, okay, for sure, I'm gonna take this trade. And we all took it and it played out perfect. But like that's like an example of like a setup that I would recommend you take or anybody else take. And I would take myself because everything lines up. Like I'm looking for
Sure.
like those setups that are basically like a gimme, it's like a for sure. Because I don't like the
Mhm.
stress of entering a position and then you're kind of like sitting there and you're like, fuck, I should have just not, I should have sat out of this one.
Sure.
Like you start to second think it.
Yeah.
But if you do have the confluences there, you're like, okay, I'll take it and I'll just let it do what it needs to do, whether it hits or doesn't hit. I'm still going to be comfortable with what the outcome is. Yeah. So yes, since that's the case with you trading one account, we'll probably stick to trading view for now. In the future, later on down the line, I'll teach you guys about like Ninja Trader and stuff. That stuff's not really necessary until like you get to that point.
Gotcha.
And then you're already familiar sort of with Apex. Again, we'll stick with the paper account first until like you feel really comfortable. And
Okay.
then you're gonna have like a couple options. So I'll just go over like a quick overview. So
Mhm.
Apex, with Apex, you can have 20 accounts. So there's like pros and cons to the different types of companies. With Apex, you can do a max of 20 accounts. So if you wanted to do that 50K account or whatever, you can have 20 of those. Like, let me show you my profits. So basically, show you my accounts for today. So basically, these 20 accounts up here are all Apex, like right, I made 1,200. So this is how the pros and cons kind of play themselves out. Like when you have Apex, you can have a bunch of accounts, but you have to do the eval phase. So when you do the eval phase, it's going to take, maybe a week or a month or however it may take for you to pass that eval. But once you pass that stage, you're able to make a lot more money when you're with 20 accounts versus with these down here, these 5, these are Tradeify. It's another company. You don't have to do an eval phase. You go straight into it. But you can only have a maximum of 5 accounts. So,
Gotcha.
there's a pro and con there. It's like either you do the work up front and then you have more accounts, or you pay a little bit of a premium and then you go straight into it without having to do this eval phase.
Right.
So in the future, you can make that choice, whichever one you guys want. I think you're probably gonna want to go with both eventually, but we'll cross that bridge later once we get to that point.
Okay.
So yeah, we went over TradingView. We don't really care about Ninja or Tradeaway right now because you're going to be directly on TradingView. Let's see, we went over that. Okay, so now that we have all of this pretty much kind of covered, like the basics of the platforms, we could start off with going over the strategy. So I know there's all these modules here that like cover the specific indicators and stuff, but the main thing that I'm going to cover here during the mentoring session, at least from the beginning for the foundation, I'm just going to cover the stuff that matters, because there's going to be a lot of stuff that you can cover, and obviously later on you can supplement that with the stuff that you're already following. But I'm going to have you guys focus on like basically my routine in the morning. So like that one strategy, the tools that you need for that specific strategy, the confluences, the red flag, etc., stuff like that. But if you guys ever want to go back and watch the videos, I mean, it's kind of overkill because there's so much stuff to like look at here.
I'm watching the short videos and the mastery class ones. I haven't watched the red flags videos though, so
okay,
that's what I need.
Yeah, no, that's fine. It's not super necessary that you watch that because we'll cover it together, and I think you understand it a lot more when I'm showing you on your screen like directly.
Yeah.
You watching it, you're going to be like, oh, this kind of makes sense, but it doesn't fully make sense. And during the session or our sessions in the future, I can correct you, or I can like point you in the direction so that you know exactly what you're looking at. So with TradingView, do you have the free account, or do you have I know there's a couple tiers to it.
I have the premium account that's 30 days trial period.
Okay, so the trial's right now. Okay. Yeah, so that's cool. That's you don't really need the premium, but if you want to keep the premium moving forward, you can. So you've probably seen how I use these tools here, the market profile and the 1 minute, 30, and 1 hour.
Yes.
So if you want to use this tool, you would need the premium. It's not super necessary because I cover it during the live session, so you can kind of just look at my screen when I'm looking at it. But once you're kind of trading on your own and you're looking at your own confluences and stuff, then it would make sense to have it. But yeah, if you don't want to take that leap yet and have to go to the premium, then it's fine. But if you do want to have it, obviously I can show you how to set everything up exactly how mine looks. So let's see. Since you have premium, you should be good. Did you pay for the market data already, or not yet?
I'm sorry?
Did you pay for the market data on TradingView?
No.
Okay.
Give me 1 second, Sean. Someone's at my door.
Yeah,
Sorry about that.
Take your time, bro. No problem. Can I help you?
Charlie was all
Worked out.
good job, Charlie. We're back.
Have a random at your door.
Yeah.
Where do you guys live? You guys in Long Beach?
No, we're Hacienda Heights.
Oh, okay. And you guys are way out there, huh?
Yeah.
Have you guys always been out there, or Gina, you've been?
I was in Long Beach, yeah.
Yeah, I know, 'cause I haven't seen since I think Randy and Steph's, right? A long time ago.
Yeah, it's been
Yeah.
a while.
Yeah, no, I haven't seen Randy in a while either.
Oh, really?
Yeah, last time I saw him was him and Steph was at my wedding, I think. Yeah. It
Oh, man.
was like last summer.
Damn, that time flew.
Yeah. They're far, that's why. I mean, they're in Ontario, so it's like it's a drive
Mm.
to get out there.
Yeah, that's really far. And like everybody else is like, like Tommy's in LA and you guys are all towards this area.
Yeah, everyone's kind of spread out, so
Yeah.
it is what it is. It's life.
Yeah.
Right? It's life.
Yep.
Yeah. All right, let's see. I forgot. So we were talking about trading view. Oh yeah, so the market data. So you can there's the market data is going to be cheaper than buying an Apex account because what people typically do is they'll either pay for the data, which is I think like $4 a month, that
Mhm.
you get real time. Because so on your screen here on your trading view, it probably says delayed right here, right on the top. It's like a D. Because if you have market data, it would say market open.
Oh, I'm sorry. I gotta look on mine, huh?
Mhm.
Mhm.
No, no.
I don't think so.
Oh, does yours say D or does it say market open?
This one right here. Um,
Or you could share your screen if you want. That'd probably be easier.
so how do we share?
Yeah.
On Zoom, there's gonna be like a green share button on the bottom, and it'll you can choose a screen, I think your main screen or your trading view. There we go. Okay. Oh, it looks like you do have the data. So I'm
Where are
assuming,
you, where are you seeing that at?
yeah, so right there it says CBOT on the top.
Uh-huh.
Yeah.
Yeah, because if you're not paying for the data, it would say delayed.
Oh, it says market open.
Yeah. Yeah.
I'm assuming you guys pay for it, or I mean, I don't know how you guys got access to the live data.
You might wait for it.
I probably gave them my information.
Yeah, because oh, I'm surprised you guys have it because like nobody knows how to sign up for the live data. like so I'm assuming you just kind of figured it out on your own or you did it
It
unknowingly.
was just an accident.
Yes.
Yeah, 'cause I don't even know if that's covered in the videos because
Nice.
well you have the data, so that's all that matters. So now that you have the data, that's just so I was wondering because if you didn't have the live data, I was assuming like when you're paper trading, because it's 10 minutes delayed if you're not paying for the data. And
Okay.
Oh,
and then I was thinking like if you're trading the paper, you might have been entering like super late or like 10 minutes after it already happened.
I'm paying attention to like the timestamp, so I think it's on time.
Yeah, no, it would be because if it wasn't, that green dot right there would be yellow and it would say delayed.
Gotcha.
okay.
Okay.
So you are on the
Okay.
data. Okay, so now that you have that, I mean that's perfectly fine. The problem is because if you're not on the live data, it would show like like right now we can see the exact time.
Yeah.
If you're on the live data, it would show 10 minutes before, so you would basically be behind. Like you wouldn't be able to see these like the 10
Okay, I see.
candles. Yeah.
Gotcha.
So you're good. You're good. All right. So now that we have all this set up, you guys have any questions right now? After this, we're gonna go into the strategy. So if you have anything that you want me to cover beforehand, we can cover that.
No.
Okay, perfect. So let's see. I'm gonna have you set up your screen. Did you purposely trade on the micro, or you like is that just
No, I was watching it because you were talking about if you start with a smaller contract or a
Yeah.
smaller account that it was going to be kind of hard to um, play some entries nowadays because of the volatility of the YM.
Yeah, no, you're good. So since you're on the paper account, you can probably just trade on the YM. It's the same exact thing. So if you were to go between YM or MYM,
Mhm.
it would be exactly the same thing. It's just you'd be able to take less risk. So like if you were to take a one contract on the YM, which would be the mini, it would be $5 per point. On the MYM, it'd be 50 cents per point. So it's
Yeah.
basically 10. So Now that the market's kind of like slowed down a little bit, you can probably just go on the YM and then you can practice on there. But in the
Cool.
future, if you want to, it would be the same exact thing. It'd just be a different symbol.
Mm-hmm.
Yeah, so you can just type in YM and then you can get on that chart. Let's see. So I'm gonna kind of set this up. So you want to take that blue thing off the chart, or do you like it like that? See how it's like the blue background?
I don't care for it.
You want to take it off?
Sure. However way you guys usually do it.
Okay, yeah. So you can right click on the middle of the chart and then go to settings. Right there on the bottom where it says electronic trading hours background, click on that box, go to
Mhm.
on the bottom and then just drag that to 0, or you can type in 0, whichever.
There you go.
Yeah, so now it looks even because it's like,
It looks more clean.
yeah, it looks more clean because if you have it on, it's gonna just be blue during the New York session trading hours. And it's just a new feature that they added. I don't know why they TradingView just updates stuff sometimes and they don't say anything. So you kind of have to figure out how to like fix it. But so we have that set up right there. I'm just gonna have you turn on the tools that like I use. So let's go over to your indicators on the side. We'll turn off the high-low indicator. You can have that on in the future. But this is gonna make it easier so that you can identify the entries that we're looking for.
Gotcha.
So now let's right click on the middle of your chart. Let's go to your settings. I'm just gonna change the settings for the bars a little bit. Right where it says borders and it's green, let's change that to black.
Okay.
And change the red one to black as well.
On borders?
Yeah, borders. And then you're gonna do the same thing with wicks, right next to it too. Yeah, right below it. It's gonna be easier to see the candles this way. And then click on OK. And then next thing, let's so you don't have the sessions on your chart. Let's go to your indicators and your invite only scripts.
Yeah.
And let's go to K2 sessions HL.
Two sessions.
And then let's go to your settings for that indicator.
Okay.
And then let's change the that red one above London. We'll change that to 2 and 11. So the first hour, we'll change that where it says 3 o'clock. Yeah, we'll change that to 2. I'm changing it to the daylight savings hours.
2 and 11.
11 for that one, yeah. And then right there where it says background, let's uncheck that. And then click OK. And then so let's go to the middle of your let's check off the momentum divergence on the bottom, that indicator down there. You don't really need that, so we can trash that. And then on the trend meter below, let's drag that down a little bit so we can make it a little bit smaller. I just want to give you as much screen. Is that already the lowest? Yeah, there you go. And then let's go to the settings for that, unless you've already changed it. It seems like you already changed.
I just went to whatever is on your module.
Yeah, no, you're perfect. That's good. Let's so right there where it says ATR, let's reset the chart. I just want to make sure if your charts are looking right. So there's a reset chart button in the middle. Sorry, bottom middle where it says where your ATR number is at. It's that right option where it's like an arrow that goes in a circle. Okay, perfect. I just want to make sure your candles look normal. Let's see. Let's go to your, or you already set, it looks like you set a lot of the stuff up, right? Let's go to your trailing stop settings. You're like the only one that did like his homework before. I always tell people look at the video. Nobody, like literally nobody looks at the videos. So
they're pretty informative and they're good.
Yeah, I don't understand why people never go through it. Like I'm kind of like going through the steps I typically would go. Someone who like didn't do anything beforehand. But it looks like you did most of it. So this is good already. You can click cancel. And then let's turn on the K2 reversals indicator.
K2 reversal.
Now you might have it on, you know?
I think I have it on there.
There we go. Okay, perfect. Now let's go over to the settings that's on the bottom right where it says BADJ. It's gonna be on the right above it. Let's go to that settings button. Go to where it says scale price chart only, and then click on that. It's gonna be the third option. There you go. So now your chart looks normal. Because earlier it was kind of spaced out, and I was trying to figure out if there was
Okay.
anything wrong, but now it looks pretty normal. So now that we have this set up here, if you want to adjust any of the colors, you're more than welcome to. If you like them how they are, that's perfectly fine. But if you're good, we can probably start looking for some entries here.
Yeah, I think I'm good. Do you actually make your momentum signals darker or lighter usually?
I make them like a little bit lighter. If you want to make them lighter, because they're kind of bright.
Yeah, okay.
Yeah, so if you want to make them lighter, you can. You can go to your settings, go to your style. You can go click on that green there. I usually use that regular green, so I just click on the green on the, yeah, like the softer green. Yeah, that was fine right there. And I usually change the opacity to like, I think 30. Yeah, however light or however dark you want it. I just like it to more of a background,
Sure.
just to see it. And you can do that with the red one too if you like. Yeah, and if you want to do the same thing with the trend meter below, it's up to you if you want to keep it bright or if you want to keep it. It's just for me, I get distracted, so I can't have like that are too bright.
See that. That doesn't even look green anymore.
It's like bluish green.
Okay. Okay.
All right, perfect. So let's go back to my chart or my screen, and then I'll show you guys a couple of examples, and then we'll go back to yours, and then we'll see if you can spot them. So now that we're back over here. And this is going to be the same strategy that I've been doing pretty much every day since like the beginning of the year. The main strategy that we're going to be applying is the momentum pullback scout version 2. I'm pretty sure you're like somewhat familiar with it since it's like the only thing I look at. So it's a super simple strategy. And I'll go over the requirements step by step. So these bars here that go up and down, the ones that are green are bullish momentum. This usually indicates that momentum is going to the upside. And then the red bars that go up and down, well, this shaded area is going to be bearish momentum. So like basically the basic gist of the momentum is when you have a red momentum, it's going to indicate that price is going down. When you have green momentum, it indicates that price is going up. Doesn't necessarily mean that price is going to forever go up, but it's just means that it's temporarily going up to some extent. And then that's where you use the other confluences to kind of identify where price is going. So the first requirement here, the first thing you want to look for is going to be a momentum. So like whenever you have a sell momentum here, you're basically only going to be looking for sells. And then vice versa. If you have a green momentum, you're only going to be looking for buys here, right? So for these two, they pretty much, you can't have back-to-back momentum. So like you have to have a sell, and then you have to have a buy, and then vice versa, sell, buy, etc. So your first step is really just confirming a momentum signal, whether it's a sell or a buy. Because once you have that, all of your analysis follows that specific momentum. So using this one right here, we have a sell momentum. So from here, that's going to be step 1, right? Step 1, confirm momentum. We have a sell momentum here, so you're only going to be looking for sells at this point. For step 2, you want to confirm a retracement. A retracement is just an opposite candle in the other direction. So when you're looking for a sell momentum, you're basically looking for this here to confirm that you have a momentum for a sell, and then you're looking for the first green candle after it, which is going to be this one right here, right? Because you have a sell momentum, it's red, and then there's green. So once you have that green right there, that's going to be step 2. Once you have step 2, you'll move on to step 3. You want to confirm a continuation past momentum signal. And that just means that you want to have another red candle. Doesn't matter how big, how small. You just want to have another red candle and it needs to close below the momentum here where price started. So can you understand here how like this here is like, this is basically your catalyst. Everything happens based off this momentum signal here. So you got the sell momentum, you got the retracement, and then you got the confirmation or prices coming back down, but you just want to make sure that it's below the momentum right here. So like your main focus is going to be this momentum area. And then everything that happens after it is going to be basically your storyline. You're looking for this type of pattern. Where price kind of goes down, it retraces up, and it goes right back down. Super simple pattern, but you're using the tools here to identify the confirmations. So like basically, if you're looking for sells here, the pattern that you're looking for is something like this. When you're looking for buys, you're looking for the opposite pattern. And it's as simple as that. I mean, it's pretty simple, the strategy by itself. When it starts to get a little more complicated is when you start to include confluences. So you'll probably see on the live session, I'll be like, oh, this is an MPSV2, but then I'm looking at the confluences. And if I don't have the confluences there, I'm usually like, this is an entry, but it's not one that I'm going to take because it doesn't meet the criteria.
Right.
So right now, the foundation is I just want you to understand the actual strategy. And then later on, whether it be today, whether it be next week or whenever, we'll start to add in the confluences because I don't want to overwhelm you with too much information where like you start to mix up the strategy or you start to overcomplicate it. Because you can see that it's super simple, right? The strategy is very simple. It's like 3 steps and you're basically checking off the list exactly as they come up. So looking at the criteria over here again, let me just go over the requirements step by step. So step 1, confirm momentum signal. That is going to be right here. Step 2, confirm retracement. That is going to be this green candle right here. Step 3, confirm continuation past momentum signal. And then once you have those 3 requirements, as soon as this candle closes, I'm sure you've seen during the live session, there's like usually a countdown that's like on the side over here. Usually, whenever a new candle opens, it'll start at 60 and it'll drop down to 0, of course, because that's when the candle's going to close. What I typically look for is when this setup starts to set up for me, I usually watch it until it gets down to like the last 10 seconds. And then once it counts down to like, 5, 4, 3, 2, 1, once that 1 hits, that's where I enter the position. So like usually you would have the trade ticket window, like for example, you just have the you'd have the window open and then you'd have it set up. And I'll show you that a little later. I'm pretty sure you already know how to set up the entry and get in. But basically I'll have the window ticket open and as soon as the candle closes, I enter there for a sell.
Yeah, I'm still trying to learn how to have a pending entry on it. And I was going to ask, and maybe you'll go over it later on, but as far as, is there a reason why you go in on the entries when the candle closes? Like do you make any entries in between and why not?
Yeah, so I usually do market orders because the way that the strategy is set up is as soon as that candle closes, we're looking for price to push straight to the target immediately right after. So the thing is, if you have a pending order, like you mentioned, you're either going to get in late or you're going to get in, or you're just going to get the entry altogether. Because what happens, like as soon as that candle closes, price might be like down here already, and then it might not ever come back up, right?
Gotcha.
It might not ever come back up and it might just go straight down. So like that's why we have to enter at market because we're basically timing the entry where we're catching that momentum push. Like we have the momentum already set up and then we have the retracement and then we're just looking for this to push a little bit further based off wherever the ATR is so that we can get it out within the first 1 or 2 candles that comes out.
Okay.
So, there's other strategies where you can put a pending order. Which you can learn that later on down the line. Once you're comfortable, there's another guy who started with me, I think like a couple weeks ago. He's applying, it's a very similar strategy, but it's called the market flow V2. So it's the same thing, but instead of entering when price is moving, he's waiting for a price to retrace up and then he enters with the pending order around this area.
Right.
Yeah, but we'll cover that a little later. Like we want to make sure that you get the main strategy down, and in the future you can learn the market flow V2, which is very similar. It's just a different entry point. So instead of catching So same pattern, like price goes down, goes up, comes back down.
Mhm.
But we enter like down here for the MPS V2 versus for the market flow V2, you're entering up here. So you're kind of earlier. So there's just different entry points. Like there's basically about 3 different strategies that fall within the same family of like the same criteria. And there's one where you'll enter like a little early right here. There's one you're going to enter in the middle, and then one that we're actually entering is going to be right here down below.
Okay.
We'll cover that later because we don't want you again. I don't want you like there's too many strategies, right? Like you've looked at the course, and there's like so many strategies, but like realistically, if you can focus on just one and mastering that one specific strategy, you should be perfectly fine.
Okay.
Yeah. So that's the main reason why we do market orders versus pending. But in the future, there's going to be other types of strategies you can use, which do use pending versus market orders.
Okay.
Yeah. So that's pretty much the criteria for the strategy right there. Do you have any questions before we go forward?
No.
Okay, perfect. So let me look for an example for a buy here. It's an example for a sell. Let's go back. And these are all from today. This was from earlier today. There's another one that happened right here. So again, same thing right here. So step 1, again, we're going to be looking for the momentum signal so you know which direction to be trading in. We have a buy signal here. That's going to be step 1. For step 2, the retracement is going to be right here. It's going to be the following candle. So we have the buy signal, then we have a red candle right here. It retraces for basically 2 candles, this one and this one. Not that this is irrelevant, but the requirement fits under this one. So once you check off the requirements, you can basically move on to the next one. So like requirement, you have a buy signal. That's pretty much checked off. You don't care about that anymore. Next, you have a retracement, which is going to be this red candle right here. And then once you check that off, you go down to step 3, confirm continuation past momentum signal. So you want this green candle to close past the momentum, which is going to be where this black line's at, right? So once you have that set up right there, again, once you're watching that countdown, typically as it counts down to the last second, this is where the entry would happen. And this is what I wanted to cover too. So the market last week was kind of crazy. The ATR normally is like 30-30. So like you can see over here from the requirements, as it said, yeah, that's the average. Like that's what the normal market would look like. But last week it was up to 100 to 200, and it's like it's crazy because like you don't see that ever. So what we have to do is like that's why I added based off ATR. So depending on how this week continues on, I'm hoping it goes back to normal, either stay around 30 or even 60 is fine. You know, I think ATR is cool. But when you go up to 100, that's kind of where things get kind of wishy-washy because it's like you don't know if it's going to continue or it's going to keep super fast or if it's going to come back down. And you don't want to enter a position with like, you know, like for example, right here, see how the TV stop loss is we'll just say it's a 30-30, right? Like 30-30 looks like that. But if you have it and you set it at 100 and then price doesn't end up actually moving at 100, then you're kind of screwed because you're going to be stuck in this position where price is going back and forth between here.
Right.
And then it goes against the entire strategy. Like that's not the strategy anymore. So yeah, I mean, you're getting in at a time where it's like kind of crazy. So it's you're learning. You're learning like at a pace where like a normal person doesn't learn because you're kind of like getting thrown in the fire, which is a good thing. You know, it's a good thing because I feel like with a lot of people, like the people who started in January, you know, like I said, they witnessed like the good stuff early on. So they're super high with confidence and they're super excited and they're like, oh, I'm gonna make fucking millions like by next month or whatever. And then last week happens and then it's the fan, you know, they're like,
and they're like defeated.
Yeah,
exactly. So like it's kind of good that you guys are seeing this type of market. So when if and when this happens in the future, which it will happen, you know, this happens usually every 2 years or so. Every 2 to 4 years, you're gonna have some crazy black swan event where like the market's just crazy and most people don't know what to do. But you already witnessed it. So you're like, okay, market's normal when it's like 30-30, but if it ever goes back to 100, you're like, okay, this is where I gotta sit back and just watch.
Well, if we could learn through this, then I would think that when it's better, It's going to be a little easier.
Oh, yeah, it's gonna be super easy. Yeah, it's gonna be super easy because like when the market is smooth, it's just like it's like butter. It's like you just take the entry and it's like easy. You
Mhm.
don't have to worry about it.
Okay.
You've already witnessed the stress early on versus doing it later where it kind of throws you off. Because you know, like when you get on your groove and stuff, and you're kind of like, oh, this is easy, and then you
Right.
get with like the market last week, and you're like, this is actually really hard. And, yeah, it's just it's a game where like you kind of just you have to learn to adapt with the market.
Mhm.
And the good thing is that you have me here because I can kind of like walk you through it. A lot of people don't have like a mentor or someone to ask questions, like when they see stuff like that happening, where they just keep doing what they've been doing, and then they just go into this downward spiral where it's just uncontrollable.
Right.
Yeah. So yeah,
I do have a question as far as this strategy that you're talking about right now. Do you ever put in two entries with one momentum signal?
no. So well, I mean, you can, but I personally don't.
Okay.
It's gonna go the same with like the other strategies, like the one I told you with the pending order. So like for me, I'm more about like quality entries, right? So
Mhm.
from like the way I see it is, and you can see over here. So like for example, there's one entry right here, right? But if you look over here at this buy signal, there's a lot of entries that come up. Like you have one here, it retraces, there's an entry
Mhm.
that right there. And then if you wanted to like hit it again, like price retraced again right here, and you could have entered a second time. So
Mhm.
there is opportunities to do that. Um,
But you
and
wouldn't recommend that.
yeah, I wouldn't recommend that because like what happens is like when you start to see stuff like this, or when you start to get wins this way, you think that every momentum is going to be like
Okay,
that.
I see. All
So
right.
you get into that mindset where
Yeah.
you get
It
into a
could it could be a bad habit, like Gina said.
yeah, exactly. It's a bad habit. Yeah. Because that's what happens with like there's this older guy in the group, and you've probably seen him, this guy Arik, he makes a crazy amount of profit. Like some days he'll be making like 14,000 or whatever. And I'm like, how does he do that? He's obviously taking every entry that comes up. But then today
Okay.
he messages me and he's like, bro, I can't control my nerves right now because the market's like kind of all over the place. So he's like he's starting to take losses because it's not, it doesn't last like that forever. Like, yeah,
Mhm.
you're gonna have that. You're gonna have it sometimes. Like, you have a nice little leg right here. Where you take
Mhm.
a couple, you have a nice leg right here. You take a couple, and then sometimes you're gonna get markets like this where price is just going back and forth, and this is where you can really mess it up. So
Right.
I would say initially start off with just like one
Yeah.
momentum. And so the way I do it is I go one per momentum, but I go heavy on size, right? So like for that one guy, Ark, he's taking like a trade, but he's like taking like a really, really small size. So he has
Gotcha.
a lot of trades to make a certain amount of money. For me,
Okay.
when I feel confident about a position, I'll basically like double up or triple up, or not really triple up, but my average size is basically triple of what like he's doing. So
Gotcha.
so like with one trade, he'll probably make like a couple $100, but with one trade for me, I'm making like 2,000. So I'm kind of
Mhm.
I'm playing the smarter move where I'm
Mhm.
looking for those high quality entries. I'm just in and then I'm out. Because I'd rather do that. I feel like it's less stress.
Yeah.
And with trading, a thing that like a lot of people don't realize is that the more you trade, you put yourself at more risk, right? Like if
Yeah.
you like hit that one trade, or like for me, I go for that low hanging fruit. I go for that trade I know for sure is gonna hit, and I put size on that one versus taking like 20 trades and then
Right.
because like sometimes people will take 20 trades, they'll lose 10 and win 10, and they're at break even. So it's like, what's the point?
Mhm.
Uh,
Yeah.
yeah,
All that work and all that stress. No.
exactly. Yeah, like because that's how I used to trade before. Like
Okay.
now I have the routine where I trade between 6:30 and 8. Before I
Mhm.
used to trade all day. I would trade from like 6:30 up until 12. I take a little break, then I trade at night from like 4 until like 10. And I realized,
Dang.
yeah, and then I realized I was like, man, this is kind of dumb because I would document everything. I make a lot of money in the morning and then I lose it all at night.
Okay.
I put the data together. I'm like, okay, how do I prevent this from happening? Just don't trade at night anymore.
Yeah.
Living for the most part, less stress and more consistency. Yeah. So yeah, again, this is an example of like the entry for buy. Once you have that set up there, the trade will obviously run, and then obviously would hit right there. I think that's the main thing to really just focus on because it seems like you do have a strategy down already. It's really just focusing on the ATR. But if
Mhm.
you were to look at the market for today, so the average was around like 30. So if I was to like go back to the ATR at 12, so the ATR at 12 o'clock was about 26. So this is like normal market. This is how the market normally moves.
Nice.
If we go down to 11, the ATR is like closer to 40. So it's not like super far off, but it's only it kind of changes between like 10 to like 30 points, somewhere around there, which is good. You kind of have an average and you're like, okay, if the market's gonna be around this point, then I'll just use my like set my fixed TP stop loss to like maybe 50-50 or 60-60. And if you have to make a small adjustment for 10 points, it's not gonna be a big deal versus changing it from like 30 to 100. Because then at that point, you have to like restructure your whole contract size.
Okay.
Like for me, I'm typically using like 10 to 15 contracts on a 30-30 type move. And then if I'm doing like a 60 ATR, then I would just like half that, right? Obviously. But if I'm going from like 30 to 100, I gotta like do the math and kind of figure out like what my risk would be on that one specifically. So
Is your strategies, are they usually like 1-to-1 ratios?
yeah, they're usually 1-to-1. So like what I've noticed too, and I kind of put that in the Discord yesterday, was during a normal market, when the trades come up, they usually don't go on a drawdown. So like in the future, not right now, not obviously because the market's not consistent, but in the future, if someone wanted to do a 1-to-2, you technically could do that because the target would be the same. But since the market never really goes into drawdown, if it does go into drawdown, it's probably going to be either a risky trade or it's going to lose. So you go and check your losses at the halfway mark.
Gotcha.
Yeah, right now is not a good time to experiment though, because like the thing is so volatile that like now it does kind of go into drawdown a little bit before it goes back up. But typically it would go straight. I think the example over here, let's see, yeah, like this example that we went over earlier, like this is during the market was actually pretty normal right here. And the ATR was like 30. So typically this is what an entry would look like. It would look like this, where see how price goes straight down and it doesn't go into drawdown at all.
Okay.
So when the market's normal like this, you can technically do a 1-to-2 because most of the time it doesn't go into drawdown. But I wouldn't do this now, like during like this week or like until the market has kind of like been normal, because it's not always going to be like this. Like our entries for today, let me see. So I think there was another example here. Like I think maybe for this example, because it's so choppy. Same thing here, 30-30. So for this one, if you were to half it, I mean, this would probably still survive, but it would be pretty tight. But it usually doesn't retrace back like that.
Oh, okay. I see what you're saying.
So like right here, here's another example of it not retracing back. So buy signal, retracement, confirmation. So see how it pushes up and it never really pulls back? This is how a normal, like under a normal market, this is how it would be. So you can do a 1-to-2 if you wanted to. But it's not always the case. So like the entry that we took this morning, I think we took a sell, yeah. So we took the sell right here. Took it for a 60-60. Actually, so yeah, like I said, like all these examples I showed you, there's like no drawdown. A lot of times, like because the market, oh, so this is actually a good example. This is the one that came up this morning during the live session. Okay, so see how these candles here are kind of, they're not like moving directly down, right? They're kind of like they swing up and they come back down, they swing back up and they come back down. So for this one right here, if you were to do something like that and you had your TP stop loss at like 50-50, I think this was a 60-60 because the ATR was just changing on open. So it's a 60-60, but if you were to cut your stop loss like to half, to 30-60 for a 1-to-2, you would have gotten stopped out, but then eventually would have came down and hit your profit target. So see how like if you have
It's close. It's close. It looks like it's close though.
yeah, yeah, exactly. So that's why you need the cushion there just in case stuff like this is happening because it's so volatile. But when the market is moving smooth, like the other examples that I showed you in that situation, and it's consistent like that, then you can do the 1 to 2.
Gotcha. All right.
Yeah, because then you can just double up profit, and then if you do have a loss, you're fine because you could have 2 losses to equal 1 full loss.
But most of the time when you're doing entries, it's 1-to-1, right?
Yeah, I'm usually doing 1 to 1. But from January up until now, because I pretty much record the entries and I kind of review them later. I started to notice that like the 1 to 2 does work very well. So maybe at some point once the market has kind of gone back to normal, but right now I'd probably just stick to the 1 to 1 for now.
Sorry, I didn't mean to throw you off of what we're talking about.
No, no, you're fine. You're fine because we already. I mean, you pretty much understand the strategy for the most part. I don't know if you have any specific questions regarding the strategy or you get it.
No, I think it's pretty straightforward. Yeah.
Yeah.
I think as long as like you stay on track and not create bad habits, get them in.
Yeah, exactly. You just wanna to stick to the routine and not kind of
Yeah.
go off track, right? Because like I
Mhm.
feel like that's kind of what throws people off. Like they see how easy it is to make money in the market, but they don't realize that it's really easy to lose money too. So
Yeah.
like there might be good periods, and then once the bad periods happen, they don't know how to react to that. So so I would say, stick to one per momentum in the future if you feel really, really confident or you start to find your own. Because what happens with a lot of people is we build this foundation and then people will start to understand what they like and what they don't like. So if they like to take more entries, then they'll take more per momentum. Or if they like to trade like me, more conservative, they just stick to like 1 entry per momentum and then they add size to it.
Gotcha.
So,
As far as the strategies that you have in your course, what's maybe it might be a hard one to answer, but what's the most common strategy that you use during your sessions?
the strategy that I use for the most part.
Yeah.
Just this one, just the MPSV2. So for all the live sessions from January up until now, it's been only the MPSV2.
Okay.
For that, it was the other strategy that I mentioned where you have the pending order. Same, it's a very similar strategy, but it's just instead of having the market order, you're putting a pending order there and you're letting it fill. So you're kind of just leaving it there, and then when it comes up to trigger it, it'll fill the order. That one works good too. But it's like I would tell people that are applying that strategy, it's either you stick to one or the other. Because when you start to apply both, that's where you start to double up on the momentum. Because they're both the same, using the same catalyst off that momentum, but you'll have 2 different entry points.
Okay. Could I ask MPS level indicator? I'm not too sure how to I guess I'm not understanding it or how to set it up.
Oh yeah, no, definitely. So you want to set up your tabs exactly like mine?
Sure.
Okay, yeah, if you want to do that, we could set it up. Because you're like the only one that has premium. So like when I try to set it up for people, they can't set up all the tabs because they can't open up the market profile. So if you want to share your screen, I can just show you how to set it up exactly how mine looks. Yeah, because this will be easier for you to understand the levels indicator because you'll have the actual tab open for it.
Okay.
All right, so let's go to so that second tab. Are you using that one or is that just like a random one that you have open?
That's just a random one. I could close it out.
Yeah, let's close that one out.
Oh, what is that? Oh, okay, so that's the
Oh, are you using the application or are you using the you're using a web browser, huh?
web browser, I believe.
Yeah, that's cool. Whichever one you want to use. It's just the application is like I mean it's gonna be the same thing. You might have some like some crossover, but I think you should be okay. So for that third tab, is that just a random tab that you have open?
Yes.
Okay, you can close that one and then we'll start to set yours up. So for this one right here, you see on the top right where it says unnamed, you can probably just name this one like your main chart so you know what your main one is. Yeah, so let's just rename that to main. It'll be so it's like the middle option. It's right below where it says main. There you go.
Okay.
Yeah, so that you know exactly which ones are which.
What do you usually name it?
For that one, I just call it main.
Main.
And then let's go over to that drop down again, and then click create new layout. And then you can call this one market profile 1 minute, or you can just type in 1M for short. So let's close that volume indicator. On the where it says sell on the top left, you'll see volume right there. This one's just the default one that always opens up. So you can close that one there, trash it.
Should I remove it or close it?
Remove it, yeah. And then go to indicators. And then type in TPO. It's gonna be time price opportunity. There you go, first one. And then let's go into your settings for the TPO.
Settings for the TPO. Okay.
And then, so let's go over to your inputs, the first tab. See that, looks good. All right, let's go over to style. Let's uncheck blocks and letters. For the point of control, down below, where it says POC, click where it says don't extend, let's change that to extend. And then change the color to green. And then let's go down to, for this one, you should probably keep it at 100 because you want to see where the line's at.
Okay.
Because this one's going to be important to know where the line's at. So keep that at 100. And then let's go to value high, VAH, and then click change that to extend as well. And we'll color that box red. And then value low, change that to extend VAL, and then change that to green. All right, now let's go to the volume profile tab on the top. And then let's go to VAH, let's check that on. Let's change that to extend, and then we'll color it red. And then go to the VAL next to the one below it, extend that one as well. We'll color that green. Point of control, extend that one too. And then color that, leave it black. So now right there on the bottom where it says volume, let's click on that and let's put the opacity at 0. And then same with the volume area or value area, we'll do the same thing with that. And then for placement, put right. Perfect, now click OK. Okay, great. So basically what this tool does is it calculates the volume. So basically all of the orders that come into market, like the actual orders that people put in, it's going to identify where the value high is. The value high is going to be that red line. The value high is going to indicate where price is overpriced. So basically, what it does is it takes all the data from all the orders that come into the market, and that red line is going to show you where price is considered overpriced. So like whenever price gets to that point, what tends to happen is price will kind of push down, and that black line in the middle with the green box where it says point of control, that's what's considered fair value. So everybody in the market kind of agrees that this is fair value, like this is the fair price for this asset. So you see a lot of times price will go up to the top, it'll bounce off that red and it'll come back down to that green box or the black box. And then same with the value low, which is on the bottom, that's considered a discount. So when price gets down to that point, the players in the market agree that that's a discounted price. So you can see when price comes down a little bit, it bounces up a little bit and it goes right down to that. It goes right back to the middle.
Okay.
So what happens here is price will kind of go to the high and it's like people agree this is too expensive. So then people will sell. And then vice versa, when price goes down to the bottom, like price is too cheap here, we're gonna buy a discount, and then price pushes back up. The way that we use this tool is I look for bounces. So a lot of people will try to catch the bounces and then they try to catch it right back to the middle. But for me, what I use this for is for just confluence. So people will use this tool for a specific strategy, but for me, I'm just using it for confluence. So see, you can zoom in a little bit, and then you can kind of see where the where that current green candle, see how it bounces off the red line right there?
It's right here.
So go to the right, see where that wick is, and you know what a wick is, right?
The little line after the candle.
Exactly. So like that wick right there, you can see how it's kind of bouncing off that red line. I use that as a confluence. So some people will typically sell at this point, but for me, if I'm looking for a buy entry and I see a bounce off like any line, whether it be the red line, the black line, the green line, or the green box, I'm just using that as a confluence. So for me, I'm not necessarily using this as a strategy. I'm just using the MPSV2 as my strategy, but I'm using this to confirm that, okay, if I'm taking a buy, I want to make sure that there's some bounces from the bottom end, or vice versa. If I'm taking a sell, I want to see some bounces from the top end. Because usually when I'm looking for a sell, I want to make sure that other people in the market are also looking for a sell, right? Because I want to be on the right side of the market. So
Okay.
in the future, once you start to like understand how to read the charts and read the market and stuff, you can probably use this to your own advantage, like with your own edge. But for the most part, this is what I use it for. I just like to look at these bounce points.
Okay.
That's pretty much how I use this here on the 1 minute. So you're done with this now. Let's create it for the 30 minute now. So now let's go back to that drop down next to market profile. And then we will do a create new layout again. And then you can call this market profile 30 minute. All right, perfect. Now let's go over to close out that volume indicator again. And then we'll go back to your indicators, and then we'll open up TPO. Again, a new one. And then we'll pretty much do the same thing. So let's go to the settings. We'll go to style. Yeah, and just do that. Extend, color it green.
Red.
Oh, you're on the volume profile. Oh, yeah. So value low, you'll color that. Uh, the value high will be red, and the value low will be green. So opposite.
Right.
Yeah. Now it'll be green. And then extend that one. And then that one black. And then the volume, we'll put that to 0 opacity. Same with the area. Placement on the right. And then you can go over to style. And then we'll uncheck blocks and letters. The point of control, you can extend that out, keep it black. Or actually, no, that's gonna be green. Value high below, we'll extend that one. Color that red. Value low, extend that one. And color that green. Perfect. And then you can click OK. So same thing with this. Basically, or well, let's change this to the 30-minute time frame. So let's there we go. Yeah, so with this right here, same thing, but you can kind of see how like the market profile is marked up from different days, right? So you can kind of see how price kind of reacts to it. Obviously, it was kind of crazy last week, so it's not going to be respecting anything. But if you look at today's, if you zoom in a little bit and just look at today's, you can see how price was respecting the structure there. So again, we're going to be using it for the same reason that we're using the 1 minute. We're just looking for bounce areas. And the reason why we do this on the 30 minute is because there's different types of traders in the market, right? Like the people who are trading short term will trade on the 1 minute, and that's why we look at the 1 minute. The 30 minute, you have people who are trading basically day trading for the entire day. So this is gonna have you use your confluence with people who are trading for longer period of time. And then for the next one, we're gonna do it again for the 1 hour. So you can kind of match your analysis with people who are trading on the longer time frames that are like trading for days.
Okay.
So now that you have this set up right here, we can do it again for the 1 hour.
Are we doing exactly the same?
Yeah, exactly the same. We'll take
Okay.
others, point of control, you'll extend that, try to change that to green.
This one's red.
Value high is red. Value low is extend green. And then you can go to volume profile on the top. Yeah, value high is green, or sorry, red. That's red. Value low is green. Black point of control. Zero for area. There you go. So you get the gist of like how the market profile is used, right? You're just looking for the balance points. So you got the 1 minute, 30-minute, 1 hour setup. Whenever you're looking for an entry, basically, if you're looking for a sell, then you just want to look for rejections off the top end. If you're looking for a buy, you want to look for rejections off the bottom end. So that's pretty much what I look at during the live sessions to have my confidence there to make sure that my trade is valid. So now that you have these set up, let's open one more, and this is going to be for the volume profile. You'll call this volume profile 1 minute. And then we'll close the volume on this one. And then go to your indicators and type in VRVP.
VRVP.
Yeah. There you go. So this is going to be on the 1 minute time frame.
1 minute.
Yeah, 1 minute. And then go over to your settings. For your inputs for row size, put 1,000. Go under style. Let's uncheck volume profile on the top. Let's go down to your value high. We'll color that red. And value low, we'll color that green. Okay, and then you can click OK. So for this one, you wanna zoom out. So just go down to the reset chart button on the go like to the middle, bottom middle. And then you just want to leave it, you want to leave it like this. You don't want to touch it.
Okay.
Why you don't want to touch this is because so if you zoom in, like try zooming in, you're gonna see that it's going to adjust with the market. So what it does is it just gives you the data for whatever's on your chart. So if you only have like a certain amount of candles on your chart, then it's only going to show that specific.
Okay.
So what you want to do is you want to have as much data on your chart where it's still visible. So you just want to click that reset. If you ever like accidentally, mess with it, you just want to click that reset button, and then it'll fix it for you.
Okay.
So again, same thing with this. You're only looking for the bounce points. You're not necessarily looking for price to go to a certain area. You're just looking for this to validate your position. So
for instance, this red candle hitting this green line, what would that tell us?
That would tell you that price is bouncing off the top and it's likely to push down lower. So like, for example, if you had an MPS V2, and I think there was an MPS V2 at that time at like 13, you can even check. Let's go to your main chart again. That's at 1316, right? Yeah, somewhere around there. So we could go to your main chart, the first tab, I think. And then if you go back to that same time, I think like, yeah, I was right there. So 1315 or 1316. I think there was an MPS V2 that happened. Yeah, right there. So see how like price kind of bounced off that area, and then the MPS V2 is setting up right there. So you have the sell signal, and then the retracement happened on that.
Retracement.
Yeah. And then that next one, that'd be your entry candle right there. So as soon as that one closed, that would be your entry. So if you go back to your volume profile, your last tab, Should be the last one. Yeah. So if you look right there, that same area that you asked about, like how it was bouncing off that green, that would be
Yeah.
a confluence there. So if you would have like seen that setup and then you would
Mhm.
have seen the rejection right there, you would have been confident, like, oh, the people who are trading volume profile, they're probably looking for a sell too. So if you see that kind of line up with your entry for the MPSV2, you could go into that position and not be too worried because you're like, there's other people who are also looking for a sell here. So if we're both
Gotcha.
looking for sells, it's gonna at least push in my direction where it'll hit my target.
Mm.
Yeah. So that's kind of what you're kind of just checking off different strategies, but you're not actually trading those strategies. You're just checking off to make sure that other people are looking at the same thing you're looking at.
How many confluences do you usually look for until you're actually uh, confirming your entry?
I like to see about like 3 or 4 usually.
Okay.
About 3 or 4, that's going to give me like peace of mind that, okay, there's at least 3 or 4 groups of people that are looking at what I'm looking at. So
Mhm.
if my trade hits, great. If it loses, that's fine. But at least like my setup,
You did your homework.
I did my homework and I didn't just take a random entry off like the fly,
Okay.
So those are the tools right there. Now we'll set up another chart, and this is where I'm going to show you how the levels works. So let's go to set up a new layout again. There you go. And then you can set this as you can just call it price levels. And then close that volume indicator right there, just remove it. And then open up the your indicators invite only scripts. And then go to MPS levels. And then under this, let's go to your settings. And let's go to inputs. And then let's go to number of levels, change that to 20. For that one,
Oh, sorry.
you're good. Set that, yeah, set that one to 20, and that one below, set that to 50. And then below where it says dash, change that to solid,
Yes.
and then click OK. So you're doing the same thing here. This chart is going to mark up whole numbers. So the thing with there's certain traders who like to look at these whole numbers and they consider these psychological numbers because they think that this is where like the institutions like to trade. They want to trade at where the whole numbers are, whether they're like 40,050 to 40,100 and stuff like that. And if you kind of play around with the chart and you like let's kind of go to the left and like zoom in a little bit, you can kind of see how price bounces directly off these lines, right? Because that's what I was meaning. Like people look at these as psychological numbers and they try to see bounces off. So see how those wicks kind of push away from those price points?
Yes.
Like price pretty much will go from like one area where the line's at, and it'll push to the next area, and it'll go back to the next area, and it respects these areas here. And this specific style of trading that a lot of people like to do. So I use this the same way that I use all of the other profiles. I look for the bounces. So if I see a sell entry and it lines up, so let me see if there's an example there. I don't think I see any examples here, or maybe like around like the 315 area where you saw that sell from earlier. I don't know if there's anything there. Like around the 13 area. If you see any like top bounces. Probably not.
Right here.
Oh yeah, so that one right there is bouncing off it too. So I think that would have been around the entry time for the setup that we were looking at earlier. I don't think that one rejects off it. It might. Let's see. No, I don't think there's a rejection on there. But again, this would just be another confluence. So like when you're checking off your confluences, you're basically looking, not all of them are going to line up. The entry for today that we took during the live session, like surprisingly, there was a confluence on every chart. So like when I saw that, I knew for sure that one was going to hit.
Nice.
That doesn't happen very often, but for today it happened where we had basically all 6 confluences lined up. And then another guy in the group, he was looking at his own confluences and he also said, I'm going to take this. So like we both took it and other people took it as well. And then that one went straight to profit target. So
Nice.
in a situation like that, and that's why it's good to be active in the chat too sometimes, because like I said, the people who are more advanced that have been doing this for a while, they're gonna also chime in and they're gonna say how they feel. And if like your confluences line up with theirs and then your entry looks good, then odds of it hitting are very likely.
Okay.
So this is how the levels tool is used. There's a strategy for this too that we used to use. So like basically I would look for price to kind of break past, and then I don't want to go into that too much because I think if you see that, you're going to probably start looking for that. But there's a specific strategy where we see price break a whole number and then we just keep riding it lower.
So is that why you mentioned the whole numbers
Yeah,
when you guys put in an entry?
exactly. Yeah, the whole numbers. Yeah, because that's another strategy. It's another. So there's a, how like right now we're doing the MPS V2. So the MPS V1 was based off of this specific tool.
Oh,
So like for this, you can use again, you can use a pending order for this specific one. Same strategy, it's just instead of catching as it continues to drop, you're looking for price to kind of pull back to this whole number, and your pending order would be waiting right there. But again, that's a different strategy. You probably don't want to look too deep into that right now. In the future, once you've got this MPS V2 kind of locked in, then in the future you can start looking at the original MPS and you can see how this strategy works with it.
okay.
Yeah. So there's one other profile if you want to mark it up too. This is going to be the support resistance. So we can set this one up too. You go near there and then create a new chart layout. You call this support and resistance. Or you just type in SR for short if you want. Okay, so for this one, close out the volume indicator. And then let's go to your indicators, your invite only scripts, and enable the K2 SR V2. And then let's go over to your settings for it. Let's under line length, change that to 2000. Okay, and then you can click OK. And then let's see. Let's go to your settings one more time. Just want to make sure. Just show body load. Okay, perfect. Yeah, you're good. So for this right here, you can see how it's kind of messy, right? Like you see the zones there, you can kind of see it, but it's a little messy. So what I like to do is I like to just draw my own boxes. So you can click on the rectangle tool that's on the, you have it on your toolbar right there. Yeah, and let's click on the magnet tool right there on the left. Yeah, click on that. And then go to where that red box is up, and you're just gonna basically you're gonna trace it in. Yeah. So you just you can just trace it in from the end, like just from the very end, and I'll show you how to extend it out. Yeah, so just draw that right there and then double click on it. Or just and then double click on it real quick. And then there's gonna be extend right and extend left right there in the settings. Yeah, you can do extend if you just want to have one side, you can do that. If you want to do it to both ends, it'll show you on both ends. Yeah, there you go. So now let's kind of drag that down a little bit lower. So like go to the first little dots, and then there you go. And then I like to go from like top to bottom. So basically, let's zoom in a little bit so I can kind of see where that box is at. So you could probably mark up the green one on the left right there.
This one right here?
Yeah. A little lower.
Okay.
Yeah, so when you're marking up these zones, this is gonna be like kind of where your edge will come into play, because like you don't have to mark up all of them, but whatever makes sense to you, that's what you want to focus on, because it's just gonna be it's gonna show you where the balance points are, but it's gonna be specific to like what you're looking for. Because there's going to be a lot of zones there that you can mark up, and let's let's close all these real quick. Let's go back to a different time period because I just realized that the zones here aren't really good because we're like in a new day. So
Sure.
let's go to the bottom left where the trash button's at, and then yeah, remove two drawings. Let's zoom out a little bit, and then let's go back to about 1300 or 13 o'clock, and then we'll click replay. So click the replay button on the top middle. Yeah, because the zones here aren't going to look good. It's going to be on the top right there. There you go. And then click on the 13 o'clock, 1300. There you go. Okay, so the zones look better here, right? It doesn't look good right now because the market, we're in Asia session, so the market's super slow. But here you can practice drawing your zone. So like again, let's just start from the top and then go down from there. Yeah, so what you want to do is you basically want to put your crosshair like where the wick is at. No, it's hard because you have the magnet tool enabled. But okay, let's so put your crosshair where that top wick is, where that green candle is on the. There you go.
Okay.
So just go right there and then click on it, and then drop down just a little bit. So like go to the body, like to cover that wick. Or you can drag it down. Yeah. So just click on it and drag it down. There you go. So it'll be easy as you continue to do this. It's just like kind of understanding where you want to start the drawing, and
You
then
probably gotta invest in a good mouse.
yeah, for sure that's gonna be key. Are you using the trackpad or something?
Yeah.
Oh, okay, yeah, no, it's hard. It's hard when you're on there. So same thing again right there. And you don't have to do this if you don't want to. I'm just showing you this so you're
Okay.
with it. But you don't have to do this because I'll be marking it up on my chart too. So if you ever want to just take a glance at what I'm doing. But I'll show you like why this is important because it's gonna make sense a little later.
Yeah,
So
that's good to know.
yeah. And then yeah, just draw the boxes wherever you like to see them. And again, like I said, it's going to be kind of based off your own preference because you'll see that there's sometimes going to be boxes that overlap, and then you're
Uh-huh.
gonna think like, okay, I want to avoid some of them because sometimes they're too big or sometimes they just don't make sense where the bounce points are at. And you
So
probably
if it's just one line, would you draw that line out too?
so go over to the left. I think that's a big box. So let's see. Go a little farther to the left. Yeah, so that's like a huge one. So like for that, I would just not mark that one up because it's
Okay.
gonna cover so much of an area where it's like it doesn't really make sense because you're not gonna be
Right.
able to use that as like a really a balance point. I think it should be good there. All right, so let's go back to the indicator and let's hide it. Don't remove it, but just hide it for the SRV2. Okay, now let's zoom out a little bit and then let's just drag to the left. See how like the balance points they repeat? So like see if you go more to the left. Yeah, see how that top area right there?
Mhm.
And let's keep going to the left a little more. See how they respect it? See how that top area, whenever it gets to that point, it bounces? And let's go back to the right. So I think it goes back to that point at some point in the future. And see how it goes back to that point there. So this is where you can use it to your advantage. So you know how you have these lines? It basically it creates a storyline for you. So you have these like zones marked up. And if you have an entry, like say, for example, if you have a sell entry or a buy entry and it's bouncing off any of these zones, then it could line up with your confluence. So for these support resistance, this again is like another specific strategy that people trade. And they like to trade support resistance, meaning like price reaches a top point and they see that as a resistance and they see it to come back
Come
down.
back down.
And then vice versa, if you see a support, people will identify that as a support, like right there where that most recent candle is bouncing off.
Mhm.
See how like that right there, it's bouncing a second time. If you look right there to the left, it bounced off it earlier. So that would be considered like a support level. See how they both bounce off the same area, off the bottom
Mhm.
part? Yeah.
Mhm.
So that rejects right there, and then it also rejects right there on the other end. So like for example, if you had a buy entry here, you could say, okay, this is what people would call a double bottom. So people who trade support resistance, they call this double bottom because there's two rejections off the support. And if you have an MPS V2 entry for a buy, that'll give you confidence that, okay, if these people are looking for buys, and I'm also looking for a buy, and then you market profile confluence, or you have a volume profile confluence, or a levels confluence, that's like 3-4 confluences in one. That could give you confidence to take the entry, and you can trust that it's going to hit.
Okay.
So that's pretty much how I set it up. Those are my confluences that I look at. And it's just the more confluences, the better, of course. The less confluences, the riskier the trade would be. So that's kind of like how this tool here would work to identify. But again, these are all like separate strategies. So like, at some point in the future, if you want to like kind of move away from the MPF2 and you think like maybe the support resistance is something you like more, then you can always like mix and match.
I got it. Okay.
Yeah.
The breakout seems to be like for me at least, seems to be like the easier one to identify.
Oh yeah, no, that one's super easy. But like, so with that strategy, you need to have like kind of like a bigger bankroll to run that one. Because like I started applying that one. Well, every year I have like a little variation to the breakout, and there's gonna be periods where that thing just hits. Like every day it hits, and it's like easy because just once a day, right? But then there's gonna be periods where it's like kind of dead and it kind of dies out. So when you're trading with a prop firm, it's hard because you have like this max loss that you can take, right? But if you're trading like your own money, your personal account, you can just keep those losses and then just keep rolling with it until it comes back. So yeah, that strategy is good. But I realize that it's almost impossible to do with a prop firm long term.
Gotcha.
Because you'll be good for like a good period of time, but then once it stops working, it's like you're gonna really eat into that drawdown to the point where the account's blown at that point. Because what happens with the prop firm sometimes, just during the eval phase, is it has a trailing drawdown. So say for example, I have a 300K account, right? And say I bring that up to 315,000, right? But my max drawdown is 7,500. So if I go down 7,500, but I'm still above like where I started at, I can still blow the account. So that's where it becomes a problem, because even though you're in profit, the thing is these prop firms, they don't trust that you're consistent enough to keep it going.
So as long as you lose or you lose 7,500 on your account, that determines them to stop the account.
Exactly, yes, because you could still be in profit, but if you lose 7,500, then they still cut you off.
Yeah. Okay, got it.
Yeah, that's why, like for me, like I mentioned, I have like a set profit, set losses for my profit account, because I just use that as a cash flow basically. I'm just rinsing and repeating, because that's what these prop firms like to see. They want someone
consistency.
Yeah, because like for example, if you were to invest in someone like myself, like if you were to invest in the hedge fund, you want to see consistent profits just come in. Like every month, you want to see some sort of return, versus someone who's making a bunch of profit one day and then losing a bunch the next day, because that's gonna stress you out. You're like, man, what the fuck's this guy doing? Like this guy doesn't know what he's doing, right? He's just getting lucky.
It's gonna look like the charts.
Exactly, like the charts last week. Yeah, exactly. And that's what the prop firms don't want to see. But the thing is, like the people who go into these prop firms, they come in with the wrong mindset. They're like, oh, they're giving me all this buying power, and they just want to go and YOLO in the market.
Yeah.
But most of those people don't last, because in order to get paid out with these prop firms, you have to be consistent for at least a month, right? And most of those people, they'll make a lot of profit over like a 1 or 2 or 3 day period, maybe a week period. But the next week they lose it all, and they never get to the point where they get paid out.
Is there a mandatory, like, do you have to put in a position every day on those prop firms on your account?
No. So again, that's where the prop firms kind of vary. Like with Apex, you don't have to. With Tradeify, you have to put a trade in within 7 days. If you trade in without 7 days, they'll flag your account as inactive.
Gotcha. Okay.
Yeah. So that's why like some of them, they have different rules. They kind of they set up the rules in a way where they win, right? Because if they want you to be careful, but they don't want you to be too careful.
Right.
Because then like you're not going to make the money if they're like basically copying your trades.
Okay.
Yeah. But yeah, for the most part, I mean, I think that's kind of all that you really need for the for now. Um, the red flags and stuff, we'll probably cover that a little later, or I can just show you real quick. So let's go over to your main chart, the first tab that you have. So basically, the areas that we would consider red flags are going to be the lines that go from left to right. See those dotted lines right there? There's a purple one above. That's going to be the Asia high low. And then if you zoom out a little bit, you'll probably see the other ones. Yeah, that purple line.
I don't mind slowing it down too, Sean, because I'm kind of
Are you overwhelmed already?
a little bit.
Yeah. No, you're good. Yeah, because I wasn't sure if you wanted to keep going or not. Because like I said, I want to build your foundation first,
Right.
and I think you're good at where you're at right now because you know how to identify
Okay.
entries and you're on the paper account, so you can keep taking entries.
Mhm.
I think right now you should make mistakes. Like take the entries that you see, but don't worry too much about the red flags and like stuff like that. Because in the
Okay.
future, that's kind of where like you're gonna improve. Like first you want to be able to take the entries and feel confident and let the trades either win or lose. And then later on, you're gonna start to implement like these red flags where you're like, okay, these are the trades that I should avoid, and these are the trades that I should ignore. Or
Okay.
that I should ignore, avoid, or trades that I should for sure take, right? But I think, yeah, so now that you kind of have these setups here, you kind of know what to look for. Those confluences, like those extra tabs that we set up, they're not necessary yet. Like right now, it's good to have because you can look at them.
Okay.
But right now, I think your main focus is really just taking entries, right? To like enter the trades. Uh, you know how to you know how to set up the ticket window?
No.
Okay, so let's do that. So uh for example, right here, if you were to take, like you just wanted to take a sell, right? So you'll hit the sell button on the top left, and then you should probably just stay at 1 unit right now. You don't really need to go any too crazy with your unit size because you're just
Okay.
kind of practicing. So do you know how to set up your TP stop loss?
Right here and right here.
Yeah, so you'll set that up right there. Like I said before, it kind of depends on the ATR. So like on average, we're supposed to be using like a 30-30, but if the ATR is higher, then you probably want to round it up to like the higher number. So if it's like, for example, right now it's 10, like you wouldn't even trade during this type of market. It's so slow.
Right.
But this is a good sign because now it's slow. Like last, if you're looking at this in Asia session last week, like this was like at 50.
Oh, wow.
It's crazy. And the market's usually dead right now because this is Asia session, right? Asia is such a small area. Well, right now it's just Australia and Japan. So those countries are so small. Usually there's not people trading. So right now the ATR is extremely slow. And this is how it's supposed to be.
Okay.
Uh,
So this
so
is a normal market right now.
yeah, this is considered normal market. This is like a dead market.
Okay.
How it's supposed to be. So right now the ATR is super small, so you wouldn't be taking trades here. But if you were to, I think you could just take a tester trade if you wanted to, but you already know how to take a trade, right? So I don't think it's.
I do, but I don't know how to come in on a I don't know if I'm doing it right on a pending limit order or if you're trying to enter in at a specific point. I don't know how to do that. And when I put in the order, it's just like a market order and it's going to whatever position wherever it's stopping at, I guess.
Yeah, no, definitely. So let's practice on this here. So let's go to let's close out the tick window first, or let's just click on your chart and then let's just reset so you can see where the time is at right now. So let's go to a reset chart. There you go. Okay. So you see the timer right there where it says 36 to 30. So that's on the right side, like there's a number right there that's kind of counting down. It's gonna be
Right here, U2C.
right. I go up a little bit. It's gonna be right there in the red. Go up a little higher.
Right
Right.
here?
I see right there where the countdown's at.
Yeah.
So like basically right there, I'm looking at that. Like for example, there's no inch right now, but if there was an MPSV2 that was setting up, that's the countdown I would be looking at and see how it's going down to 5, 4, 3, 2.
Yeah.
When it gets down to 1, that's usually where I hit the market order.
Okay.
So like let's practice on this next candle. So let's just
Okay.
open your ticket window.
Open the ticket window. Buy or sell?
Sell. Yeah, this is just for example. And then we'll set up your take profit and we'll just set this to like 30-30. Just just for demonstrational purposes. So like right now the countdown's currently at 30. So like basically I would just wait until it gets down to like the 10 seconds. I would put the clicker like right above the sell button right there. Just the sell on your ticket window. So basically I'm just waiting for this to go down to like 0. We'll just say like, for example, there's an MPS V2 that's setting up right here for a sell. I'm just waiting for it. So right now it's at 10 seconds. You basically have your clicker on the sell button, and that's 5, 4, 3, 2, 1, and I would hit it right there. And then you're gonna have to cover the spread. Right now the spread's a little wider, it's like at 2 points. So you kind of got in a little lower. So say for example, this is where your entry was supposed to be, and you wanted to kind of adjust it to where it's supposed to be, right? Like you like earlier. So let's go over to the projection tool. Let's do a short projection. I think you have it right there in your toolbar. It's gonna be right there. But so that's long position. Let's click the drop down, and then let's click short. Okay, so let's click on the magnet tool. And then go to the bottom of that green candle, like the current green candle, because that's where your entry would have happened. And then we'll click, just click on it right there. And then now double click on that projection tool. Oh no, so the tool that you already have on the chart.
Okay.
Yeah, so just double click on that, click that to 30/30. We'll set the ticks on profit level to 30. And then stop level to 30. Click OK. So that's where your setup should be. So like, see how it's like off by a little bit? You can adjust your TP stop loss to like whatever numbers those are set at. I mean, this is a bad example because the thing's gonna go up. There you go. So let's practice the other way now. So let's do the same thing, and then we'll do it for buy now. So let's have your ticket window open again for buy, and we'll do the same thing that we did earlier. Should be preset, and then I'll just count down. It's going to count down in 10 seconds. So we got counting down in 5, 4, 3, 2, 1. You click buy. Okay, perfect. So for this one, you actually got in at where you should have been, and then we'll open that projection tool again right there. So let's you can just drag it to like wherever that red candle closed. Or where that, yeah, or wherever the green candle was. Okay, there you go. So now we'll just go over to double click on that there, the projection tool. And then let's click that to 30/30 again. There you go. Click OK. So yours is actually set up okay. So at this point, you don't have to make adjustments. It's already set up.
Do you usually click on the 1 or right after the 1 when it's counting down?
Usually around like the 1. Like when it gets to 1, I'm like in. So like right now you actually got in like perfect. Like this, you didn't have to make any changes because you got in like right on time. So like yeah, right here you wouldn't have to make any adjustments. Do you know how to close out of the position early? Like
yeah, right here.
Yeah, just want to make sure just in case. If you make a mistake or you feel like you need to make adjustments to it.
So when would you use the closeout position? When you want to take profits early, or when you want to close out if you're not wanting to be in the negative too much?
So yeah, the only times I would click on it is if I make a mistake. So if I'm in a position and I'm like, oh shit, this wasn't a setup, then I'm like, okay, I'll close out of it early. Or in a situation where the market's like it's looking kind of funky and I'm like, I just don't like how it's moving, then I would just close out early. Or if you want to move your stop loss in profit, you can just drag your stop loss down below there, and then you can move it in profit too. That's a good way of doing it.
Do you ever let your TP trail? Like, do you ever like modify the TP?
Usually not, because usually there's more entries that will come up.
Okay.
So I usually just let the entry kind of play out. There's other strategies that we applied in the past where I would do stuff like that, but for the most part I usually don't, because it's like I'd rather just get out where
we're safe. Yeah. Okay.
Because so that's a problem with Apex. So like remember how I talked about the trailing drawdown? Like you could be in profit. Like say for example you're in profit say you're in profit like 10,000, right? Like and you're trailing it and it's going up. If it comes back down and you lose 7,500, but you're still in profit, you can still blow the account even though the trade's active.
So that's a red flag.
Yeah. So
Okay.
the thing with Apex, like I said, there's pros and cons to these companies. For Apex, they want you to close out. Like they don't want you to trail it because
Okay.
when copying your trades, they want you to like be consistent with just like locking
Right.
it in.
Right.
But with Tradeify, the other company, they have this thing called the end of day trailing drawdown. So it's different. You can fluctuate up and down even though you're in profit, and you won't blow the account.
Gotcha.
Apex is different. So like that's why there's like there's specific people who choose a certain company versus the other one for those specific reasons. Yeah, but like with the prop firms, our style of trading where we get in and out at fixed TP stop loss, it works perfect for all prop firms in general.
How long do you usually let an entry go for?
So right now the market's like super dead. So like you can see it's kind of going back and forth, and it's going to take.
Yeah.
But on a normal session, I think once it reaches like 5 to 10 minutes, at that point I'm like, all right, this is like way too long. It's turning from a scalp, which what we're trying to get into, it's turning to trade. So when that happens, that's when I start to like second guess the trade. And I'm like, all right, I'm just gonna pull out. There's like no point. Because the entry is supposed to hit within the first 2 minutes, right? That's usually how long it takes for the trade to hit. So when you get to that 5 minute mark, you're like, okay, this has been running for a little too long. Maybe the market is just kind of dead right now. Because expecting your trade to hit or lose, or to win or lose within the first 2 or 3 minutes. If it doesn't lose, there's something up, right? It's because your whole strategy kind of goes out the window at that point.
So the main strategy is to, when you say scalp, is to just put in an entry and get out of the entry as fast as you can.
Exactly. Yeah. You want it to hit your target or your loss within the first like 2 to 3 minutes.
Okay.
Yeah. And then that's just how the strategy is. It's basically that's that. So there's 3 different styles of trading: it's scalping, day trading, and swing trading. We're more on the scalping side. I mean, it can turn into a day trade if the trade runs for a while. Like before, when we used to do the breakouts during COVID, we had like those big spikes that were happening like last week, but it would happen throughout the whole day. So like we would hold on to that position like sometimes more than a day, because like we'd go for these huge targets, but eventually they would hit. So that's a different type of strategy where like you would hold on to it for like hours or days versus what we're doing now where we're trying to get in and out within minutes.
Okay.
Yeah, because the market's different now too. Like, or the platforms are different. Before we used to trade with prop firms that were like from Europe, and they let you hold positions like overnight.
Wow.
Yeah, like they didn't really care. They're kind of like they let you hold on to the positions like even over the weekend. But with these prop firms, when you trade futures, you can't hold positions past 2 o'clock.
Got it.
The market resets, and then from there, it's you're supposed to clear out, and then you start the next day after 2 o'clock. So that's why like we had to make some adjustments. That's why we prefer scalping over day trading. Because what happens sometimes is you could take a trade like at 6 o'clock, right? And then if you're taking these big targets or these big moves, if your position is doesn't hit by like 2 o'clock, you just got to either eat that loss or you got to pull out wherever you're at on that trade. So it's better this way to get in and out quicker.
Yeah.
To hold on to it for too long, because then you could be screwed. Like at that point, your strategy might not be viable long term. Yeah.
Okay.
Yeah, if you guys have any other questions, we could cover it. I mean, otherwise, I think we covered a lot of good stuff today. A lot of the main things.
I guess I would like to ask about the hedge fund or the investment with you directly. How does that work? And is there an opportunity to talk about that?
Yeah, so right now the hedge fund's actually frozen. So unfortunately, so I'm trading within an exception right now for the hedge fund. Like there's an exception where I can trade for about like 15 people for a certain period of time. The broker that we're using right now, they started to notice like the money that I was bringing in. So they're like, that's making a lot of money. So they kind of want to tax me on it. They want me to pay more. So they basically were like, oh, you're trading for all these people and you're making all this money. You should be considered a professional trader. I'm like, no, I'm not a professional trader. Like I want to keep away from being considered professional, because once you're professional, like for example, if you're buying data and you're not professional, you only pay like maybe $4 a month, right? When you're
Mhm.
professional, I gotta pay like a couple hundreds, if not
I
thousands.
see.
Oh.
So
Okay.
they tax you on like you pay way more because they're like, oh, if he's making money as a professional trader, he can
Mhm.
afford the extra fees. Like with TradingView, you're on a regular plan, but if I register as professional, they're gonna make me go to professional, and I gotta pay like 2,000 a month basically
Sure.
for the tools. So yeah, right now the hedge fund is currently on like freeze because they want me to register as professional.
Mhm.
And in order for me to register as professional, I have to take this financial exam, the series 3.
Got you.
So I'm studying for that right now.
Oh, I think you mentioned that in the messages.
Yeah, I've been like kind of putting it off because I didn't want to register as professional, but now they're kind of forcing me to. So at
Okay.
this point, hopefully the hedge fund will reopen up for new clients maybe within the next month or so.
Okay.
I gotta sit for the test, and then once I pass the test, then I just gotta register, and then once that's all good, then yeah, it'll be open, and you guys will be, top of the wait list for sure.
Okay. I mean, what's the process of that, of getting
So,
it
uh,
in that
so
with you?
Yeah, so the way that it works is very similar to like what I'm already doing with the prop firms. Basically, like you would set up your own personal account with NinjaTrader, the broker that we're using.
Mhm.
You would basically sign these disclosures and just agree to like the terms and stuff. And then you would give me your login details. I would link it to my copier. So like basically
Okay.
how I post my profits, your
Mhm.
account would be like one of those accounts I would be showing profits
Sure.
on.
Okay.
Um,
Gotcha.
so that's how it will work. And then at the end of each month, we would split profits. So
Mhm.
depending on your investment account, if you're on the bigger side, if you're above 6 figures, then it would be negotiable like the split. Anyone below 6 figures, it's a 50-50 split.
Okay.
So yeah, basically at the end of each month, I would send you a performance email. I'm like, okay, this is how much profit you made gross, this is how much you made net, and then we take a split off the net. So basically, gross profit minus commissions and fees, and then whatever the net is, that's what we would split off.
Got it.
And then if you wanted to keep the money in the account, you could always just pay the split out of pocket. That's what a lot of people do because they just want to
Mhm.
keep that account. And then you would have the choice of choosing your risk. So for example, if you wanted me to risk 1,000 a day or 1,000 per trade, we would just set that fixed risk there, and then we would
Okay.
use that. So you have control over like you basically have
The
full.
limit.
Yeah, like I have no access over your money. Like if you ever like for whatever reason was like, oh, I need the money like tomorrow, like you would just tell me like, hey, I need to take a break or whatever. I need to take the money out, and then it's you have like I can't log into your account and withdraw the money because with the futures or NinjaTrader in general, when you sign up for the account, you link your checking account or whatever account you're using, and then
Mhm.
money can only go in and out of that account. So like I don't have control over any of that stuff. And basically you would just pay me, you'd wire me my
Yeah.
at,
Okay.
at the end of each month. Because
What is it? What is an average account and what is a like a starting account that you usually would take on?
So the minimum, so this is where it's gonna be a little iffy because now that I'm going to professional status, the minimum might have to get bumped up because initially
The
like
fees?
yeah, because the fees and stuff have to factor in.
Mhm.
The initial balance that you would have to have, because when I'm doing this exception, I'm supposed to only be trading for friends and family. So like I could start at like 10,000, right? And then you can
Mhm.
kind of grow that and then you can compound from there.
Yeah.
Uh, Depending on like what they require from the requirement from when I'm registered as professional, I might have to bump that up to like a minimum of 20 or 25. Because normally this type of service isn't available to like normal people, right? Like you'd have to like put in a lot of money to participate in something like this. And I'm
Mhm.
trying to keep it affordable. So I can't say exactly what the minimum is going to be, but the minimum at this time is 10,000
Okay.
because you just want to cover the margin. Like basically, you need to have enough money in the account to cover so the account can stay active with the broker,
Sure.
and that's usually
Yeah.
what they require. They require about like 5 to 10,000 to keep the account active.
Okay.
Um, I'm hoping we can keep it at that.
Mhm.
Hopefully like because I have bigger clients, and hopefully those bigger clients can just kind of eat up the cost basically for me because I'm making because obviously these my bigger clients have like 6 figure accounts, so like if I'm making them X amount of profit, usually that's enough to cover, and then my friends and family can like be on the lower end, and they
Mhm.
can take advantage of the service, but not have to
Nice.
pay
Okay.
the higher fee. So yeah, hopefully over the next month or so, I'll be done with that test, and then I'll let you guys know whenever it's ready to get added on to.
That's great.
Yeah. So yeah, hopefully it can go because like there's like I think like there's a lot of money that I'm missing out on by not having all these other accounts added. Yeah, because I'm kind of like I'm capped at the prop firm, which is cool. I'm still making like decent, like good money with the prop firm stuff and my own account. Well, actually, my own account is like blocked out right now too. So the broker they froze everything, the hedge account,
Oh,
and they
so
froze
you're
my.
leaving a lot on the table still.
Yeah, I'm leaving a lot on the table because on that personal account that I had, I was making like 5 to 10,000 on that one because that's the one where I'm scaling on.
Right.
I don't even have that. So now it's just the profit money, which is cool. I mean, it's still money. I can't complain, but it's like a lot of money that's left on the
That's
table.
just sitting there. Yeah.
Yeah, so it's sitting there. Yeah. And it was like last month we were on a crazy win streak and like I couldn't get into that money. So I basically missed out on like, 650 there of like of wire that could have been mine.
Right.
And
Yeah.
everybody's accounts. So
Well, hopefully, it all works out for you on the test and everything.
yeah, thanks. I appreciate it. It shouldn't be that bad. I'm just lazy, honestly. It's on me. I'm just like, I'm not a good test taker. I don't like studying, so it's like I just gotta sit down and just take it.
I don't know. I was watching one of your videos and you mentioned that you were a lawyer before, so I'm pretty sure you're pretty good at testing.
Yeah, well, I'm good at memorizing the tests. Yeah, yeah. So
I was telling him, I remember we were like drinking. You're like, I have to study for this stupid exam again.
oh my God, I know it's
Yeah.
so bad. It's like I thought I was done studying, and then like, here I am studying for another
Yeah,
exam.
but you got it. You done it once. It should be a walk in the park for you.
Could you explain or talk about there's another subscription that you have that's I believe it's like a 125.
Oh yeah, so that one is just for the live session, but since you already have like the live session is included in yours,
Okay.
you wouldn't need that. But yeah, because for some people, like they don't necessarily want to use my strategies, but they want to listen to my analysis. So
Okay. So
so
they
they
don't want to use the indicators, they just want to be on the live.
they just want to listen to me, yeah. Because
Gotcha.
like I was saying, there's other people who apply different strategies, but
Yeah.
they want to listen to my confluences and listen to my analysis and listen to like what I'm saying. Because if my analysis lines up with theirs and they're applying their own strategy, then they just feel confident with
More
More
confluence. Yeah.
yeah. So that's separate for someone who just wants to be in on the live sessions, but not necessarily
Nice.
use the tools.
That's nice. All right.
Because I feel like with a lot of people, well, this is what a lot of people say is that like just listening to me analyzing them in the morning kind of gives them like peace of mind. Because it's like they're kind of following along, and then if their stuff kind of lines up with it, then they're like, okay, for sure, this is probably gonna be work out.
Sure. Yeah, that makes sense. All right. So as far as us jumping on the live, we should go on the Discord and jump on the live.
Yeah, go on the Discord. You know where the premium link is at, right? It's gonna be under
It's not in the chat.
yeah, because it's posted under the live Zoom links.
Yeah, we were just in.
Live Zoom links. All
Yeah.
right.
If you want to pull up Discord on your computer or if you don't have it, I could probably show you. Because sometimes you have to enable it. Yeah, so let's go over to the server on the left side. You might not have it open on yours. It's gonna be on the left under the Discord button, under the purple button. The one right below it, there you go. That one. Yeah. Okay, yeah. So right there where it says premium on the left side, where it says live Zoom links. Oh, right below it. There you go, section. There you go. So that's where the link's posted. So every morning around like 6:20, that's usually where I post the link. And then yeah, everyone joins in and then the market opens at 6:30. So when you're on there, you'll have the real time.
Okay. All right. As far as when I'm ready for the Apex funding, just go on that site and then set up a 50,000 account, or how
Yeah, I would say 50,000 is a good starting point, and then once you're comfortable, like you can always like stagger your accounts. Like you can do the 50,000, and then the next level, which I think would be decent to pass, which not too difficult, would be the 150. Because basically what you're doing is you're just getting more buying power. So,
But
50
all of them have to go through an evaluation period?
for Apex specifically, yes.
Okay.
Yeah. For the Tradeify, it's straight to funded. You pay a little more. It's like a little bit of a So the Apex, I think you'll pay like maybe $80 or like somewhere around there for the account, but then you have to do the evaluation, so it might take like maybe a week or a month to pass. If you
Okay.
be patient to do that, for the Tradeify, it's gonna be like 100 to like 500, depending on your account size.
Hmm.
And then, but you pass the evaluation phase automatically, like there's no evaluation phase, and then you can start making like real money right off the bat.
Okay.
Yeah. So if you go over there, see on the left side where it says funding companies.
Yep.
Yeah, so click on that. Scroll to the top. I think the Apex is going to be up there. So there's details for the Apex. So if you scroll up a little higher, right there. So if you use that link right there, that's the admin code. So if you use that link right there and you use that specific code, it's like JJNIOWR. If you
Yeah.
code right there, it's going to give you whatever's the highest discount. So like right
Okay.
now, if you were to go on the website, you have to pay the full price, which would be like a couple $100. If you click on that link, it's always going to give you 50% off. But if you click on it during a certain period when they have a a higher sale, then it can go up to like 90%. It's been at a point where it's been 90% off for like maybe like a day or a week or
Good.
so. Yeah. And whenever that promo is going on, I'll let you guys know. Like on the live
Thank
side,
you.
Okay,
I'll
thank you.
notify because it's so cheap. Like it's kind of a like you could open an account and it's like $30 and like you have like 3,000 buying power, so it's like it's worth it.
Yeah.
Yeah.
All right.
Yeah. So yeah, if you guys have any other questions, I mean, we can cover it. Otherwise, I guess we can meet up whenever you guys want. So like if you guys want, usually like people will like kind of space it out a week or two because they kind of want to like make their mistakes and then take their notes.
Okay.
I would say like take trades on the paper account, make mistakes, and then just take notes and just note things. And if you ever take an entry, like say for example, if you see an entry and you're just kind of curious like why this didn't work or why it did work,
Mhm.
just get the timestamp and the date stamp, and then just put that in your list of notes as well. So the next
Gotcha.
data, you can tell me like, oh, I saw this trade on like Monday at like 7 a.m. We'll pull it up, and then we can just review it to see like, what you could have done differently or what you did right or what you did wrong. And then
Okay.
you can like really learn. Because the thing with trading is like it's really trial and error, and I'm pretty sure you've kind of noticed that with your own like paper trading. It's like you got to make mistakes and you can't be scared to make mistakes because like that's the only way you'll really learn from it.
Right.
Yeah.
Um, so if we're on the modules where we're on the strategies, and where would you advise me to go to next to start studying on your
I
courses?
would I would say do more chart time. So I would just like stay away from the modules, just review like what we covered today. This session is recorded, so I'll give you the link after if you want to ever rewatch it. But for the most part, you want to focus on like identifying the entries. So you want to like for example, if you want to go back and just go to replay mode on your main chart, you can only just replay to like a previous day. Like if you want to go back to probably not last week, but if you want to go back to like last month or like in January, you can always just like hit the replay button on the top middle. Um, yeah, go to the that replay button right there where it says alert on the top. And then go down to like where it says select bar, but there's a drop down right there.
Select bar.
Go to select date. Like say for example, if you just wanted to go back like a previous day. So let's go to January, let's go to like February, just a random day.
February.
Yeah. And then just click like on like any weekday. Yeah, like the 18th, and you can click select. Or and then you can kind of fast forward it because that's like at midnight, I think. So you can click on the or let's go to select date again. Click on that. Let's go to so on the at the time, let's set it to 6:30. So you can go to exactly to like yeah, there you go. And then click
February.
that's fine. Yeah, you can just click select and then there you go. So this goes back to market open for that day. So like Friday, February 14th. Like if you were to go and just like and test it, so you already have it set up right there, I think. Yeah, you're good. Yeah, at 6:30. Oh, I think you're back at
Oh
mid.
shit, I just changed it back. My
Yeah, you're,
bad.
you're good. There you go. So like right here, if you wanted to like just practice, you can see right there where it says the 10x button, and then there's like a right arrow next to it on the left side.
Mhm.
Yeah, so if you click that forward, it'll go over like a minute. So like if you kind of want to replay that day, you can
Right.
kind of click on that and you're basically gonna look for an entry. So you just want to
Mhm.
practice for entries. I think
Yeah.
this is the best way for you to learn because you already you
Okay.
don't go over the modules anymore because you already understand the strategy, unless you need to review it. I'll send you the YouTube link for the video. So if you ever want to go back to like, okay, what did I explain? You know, when
Okay.
the strategy or versus if you want to go back and see like how I explain the confluences.
Mhm.
Your main thing is really just to practice looking for entries because the more that you're familiar with identifying the entries, the faster it'll be for you to identify during the live sessions. Because I think that's the real thing, right? The real thing is being able to be ready and prepared to take the entry on the live sessions. And then
Right.
once you're good at that, then you can start to add the confluences and you can add the red flags and more
Okay.
stuff on.
I know you mentioned like when I'm watching your live, I know you mentioned liquidity a lot. Is that something that I need to start working on, or should I just think about that later on or study
Yeah,
for
yeah,
it?
think about that later on. Liquidity is not really necessary. That's again just like another confluence. Like I use those liquidity as like target levels. So like
Mhm.
if I have like a say for example, we have a buy entry, right? We have liquidity above. Then I'm like, okay, this buy entry could be good because I'm looking for price to reach that target. So
Okay.
it's not necessary. It's more
I'll
so
probably understand it more as long once I understand the other.
exactly, yeah. And the more live sessions that you get on, you're just gonna see me. It's the same routine every day. So like you're gonna
Mhm.
I repeat the same things every day, and then you're just gonna get better at understanding and just picking up what I'm speaking about. Uh,
Okay.
sessions.
So
Yeah,
out of all the strategies that are on the course, you would say that we should focus on the MPS strategy, the momentum pullback.
yeah. Stick to the NPS V2 for right now because
Okay.
that's all I'm doing on the live session, and that's all I plan on doing for like the rest of the year.
Okay.
So like
We'll work on that one.
yeah, that way you can like really follow like what we're doing on the live sessions. And then in the future, once you're comfortable with that, then you can maybe add on one more strategy on top of that.
Got it. Okay.
Yeah. And then like yeah, and then in the future you'll be pretty consistent with everything. You'll understand how to like follow the strategies. Where like
Mhm.
look at the chart and you'll start to see different strategies with like not even thinking about it. Because
Mhm.
that's what other people in the group are usually referring to. Like if you're in the Zoom, you'll see people in the chat refer to like a different strategy, like a high level momentum scalp, which is a main strategy that people apply when market's going sideways. But
Okay.
that's going to be something that you kind of add on a little later down the line.
Right.
Yeah.
I do appreciate your time.
Yeah, thank you for your time. This is really helpful.
Yeah, no problem. If you guys have any more questions, feel free to reach out. I know this is all like it's a lot of information to take in like within like an hour or two, but over time, as you guys sit in on the live session, it's just gonna get easier and easier. So
Okay.
it's
Okay.
gonna take a matter of time.
So we should probably reach out to you in
In
like
like
2 weeks.
Yeah, 2 weeks or whenever you want. Like if you feel like next week you're like, oh, I want to meet up already, then we can meet up next week. I'll just give you the dates that are open. Or if you
Okay.
want to meet up in 2 weeks, that works too. It's just we're gonna work at your pace because the thing is like you want to make sure that you kind of like actually practice and like make mistakes and understanding. You get frustrated, right? Because
Yeah.
you wanna like be tested. You don't want me to like basically point you in the direction every time because then it's just gonna you want to understand how to read the market for yourself, not
Yeah.
necessarily to tell you like, look at this and look at that. You want
Got
to
it.
be able to see it and then ask me later, like, okay, I saw this, but I don't
What does
really.
that mean?
Yeah, exactly. Yeah, it's going to be a lot of chart time. So, like I said,
Yeah.
the strategy. So the modules, I would just stay away from the modules and just
Okay.
practice on like identifying the entries on the chart. And then probably the next time we meet, I'll probably like just have you run through like a whole day's like setups, and then I'll just ask you, okay, where's the setup here and stuff like that.
Okay.
And
Got
then
it.
once you get that, then I'm like, okay, what could we have done differently, right? Like could you have looked at the confluences? Could you have looked at this and that? And then
Okay.
it'll just build your mind to like read the chart because
Mhm.
the chart is kind of like learning a language.
Right.
And it's like you have these tools here that kind of point you what to look at.
So more or less, we'll be like kind of you'll be kind of back testing us the next time we talk.
Exactly. It'll be like a Q&A. Like we'll just kind of go through it. I'll be like, we'll look at an example and I'm like, okay, where's the entry here? Right.
Yeah. Okay.
And then you're the main thing is that you just want to be able to identify that entry, whether it's a win or a loss, you just want to be able to identify it. So
Right.
like you just want to get to a point where you don't have to think about it, right? Like on the live sessions, I don't really think about it. I could be answering some random question or I could be looking at and then all of a sudden I pull up the chart and I'm like, boom, there's an entry. And I
Yeah.
don't think about it. And that's where you want to be.
Right.
Yeah. So it's all going to come with practice.
Yeah. Repetition.
Yep, it's a lot of repetition. I mean, I've been doing this for so long, so it's like the back of my hand. I don't even have to think about it. Like me even explaining it to you, it's like I don't even have to pull up the requirements. It's just I already know it just by looking at the chart.
What type of mouse or equipment can you recommend?
So the
Does it
mouse,
really matter?
the mouse I would recommend is it's this mouse called MX Master 3S. That's probably like that's I have two of them here. This
Oh,
probably
that's the one that Logitech?
Logitech, yeah.
Okay.
Yeah, so from my experience, I think this is probably the best mouse that you can get.
Okay. Cool.
Yeah, but yeah, if there's any other questions you guys have, feel free to hit me up. I'm an open book. I can talk trading forever, so unless you stop me, I'll keep going.
Oh, I think we're good.
Thank you for your time. I
Yeah.
appreciate
Thank you for your time, man. I appreciate it.
Yeah, no problem. So I'll probably see you guys I'll see you guys in the live session tomorrow.
Yeah,
Yeah.
we will.
Yeah. All right, guys. Have a great rest of your day.
Okay, thank you.
Take
Have a
care.
great night.